Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is April 29th, 2026, and we are starting today by looking at Bitcoin as it has now entered the initial zone of interest to the downside that we discussed, well, since hitting the main overhead resistance, the big weekly zone between right around $78,000 and $80,000. Now, to be exact, the overhead resistance is around 70,400 to around 80,500 to 700 on spot, depending on which weekly you're taking. And because it is a common area between a swing low and a close. So in this case, expected to see a move away from the zone after dropping and testing below this little bit of a higher low that came in over the weekend, was confirmed on Sunday. We do have a trend break now on Bitcoin for the daily. This is the first initial zone to the downside to really pay attention to, between $74,000 and $76,000. And if this area is closed below, and specifically we start seeing price get below, right around the 73,750 to the swing low here at 73.3. What did I say? 73,750? Yeah. To 73.3. Then we've either already seen or will shortly thereafter likely see the next zone down here between $72,000 and $70,000. Now, swings below and into that area just fine, with recoveries back above 74 would look great. Not necessarily great longer term, but nice buyback, nice bounce out of a major zone. But more importantly, if you're a bull and you're looking for immediate, upside moves, or just kind of an area to pay very close attention to on a close, you don't really want to see Bitcoin closing below $74,000. You want to see it sticking in and around that area, or if it does close slightly below, in and around the swing to close here in the 73, 200 to 300 area to around that 73,750, as it would provide for a better chance to test back up into the overhead resistance between around that 78 to 80. Then, of course, we could even entertain any moves on closes above the 80,000, 80,500 area. We could start looking for a move to the 82.5, which is a monthly close open. That was the close open higher low that put in the swing higher low at the time at 74.4. The close came in at around 82.5 there. So 82.5 to 83, and then potentially even up to 85 to 86 by the next major weekly area, which would be a weekly zone between 86 and around 89. It's a common swing, a swing higher low and lower high in the weekly up there. If we did, however, see Bitcoin start to fall through this area here, the tighter range down here off of the first major lower high to higher low, as relative to the big move down to 60K. Well, if we start to see Bitcoin breaking back into the 70 to 72 and then losing it, got to look right to 68 to 69K, likely going for the full-on range fill all the way down to the bottom side, somewhere around 65 if that is lost. And that opens up, of course, the $62.5 to $65,000 area, which, by the way, $65,000 being the first high from 2021, 68 to 69, depending on your chart, would be the second high, or the all-time high from 2021 in the prior cycle. Major areas of interest. And this is the last weekly higher low, as we are in a higher low, higher high structure. I've mentioned a few times in the weekly that it is actually a bearish structure, not a bullish structure right now. That doesn't mean that it can't turn into a bullish structure, but as it stands right now, it's a bearish retest of overhead resistance and a major area of interest that was lost. Many are looking for this to come up and tag this area 86 to 89, because all the weeklies prior to the weekly breakdown candle through there that actually led to the move to 60K well, we saw weeklies closing inside and above that $86,000 area. And many are still looking for a retest of that. If you're still looking for that, you'd want to see at minimum, um, preferably 74 to 76 hold up and just, swings below for liquidity. Maybe even taps on 72, the high side of this tighter structure down here. But reality is you don't want to see it falling through right around that $70,000 because it's probably going to lead to a test of this entire range and the last higher low at 65, which is a weekly area now. Anywhere below there, of course, would be expansion down to 58 to 60 and then potentially mid to low 60s from there and even upper 40s. And I did want to pull this up. Now, I don't have the bands on right now, but I'm going to turn them on the weekly here because I wanted to note something because this is mean reversion on the weekly. And we're gonna zoom out a bit here and we're going to get rid of this for just a moment. We're going to turn the bands on. Because I wanted to note, because this is a bearish retest. It's just mean reversion to test an overhead area of interest that was lost prior zone of support that was lost and is now upon initial, these past couple of weeks, at least the past two, and then the beginning of this week being seen as resistance, right? So it's a bearish retest. Wanted to note that if we did get, price falling all the way back through, and especially taking out somewhere around that 65, that higher low to 67K, it doesn't mean that it can't hold up in those areas. But if it did start to fall through here, you can see 58 to 60 is absolutely in the cards. And then the mid to low 50s from there, we have the lower second standard deviation, then the mid to low 60s between the low side being 52.5 to the high side being right around 56 here with a key area in there being around that, 54 to 55K. Below there, and the lower second standard deviation, especially, we'd be looking for this area to get tested, but we are seeing that the lower third standard deviation is starting to line up with the $48,000 region. So just be aware of that. To the upside, if we did see price breaking through, and especially if it's holding up even on a retest of this range and the actual higher low structure, and or testing and getting another higher low, look overhead, $86,000 is where the upper first standard deviation is now lining up. So that is something to be aware of because that is the close open of this lower high over here, and the zone being the lower high close to the swing there at right around $89,000, which is the swing higher low of this range over here before getting the higher high, lower high close, higher high swing, lower high close that led to the move down to this swing right here at 74,420.69 on spot. Nice. So just something to be aware of when it comes to Bitcoin. And of course, everything that I've been talking about is revolving around watching oil as it relates to Dixie. Of course, if oil is headed up, Dixie's going to gain some strength. It's not always going to be, tick by tick, but in general, if oil is moving up, you're going to see Dixie move up. And if Dixie's gaining strength, you're going to see the risk on trade turn into a risk off trade. And we are beginning to see a bit of that. So let's go over and check on WTI oil specifically. And I'm going to look at Brent today as well. I think it is important to look over at Brent. We are seeing the spread narrow a little bit, not much, but a little bit. On the weekly here, this is looking very much in the early goings of this week as if things closed like this right here, right now. And of course, we've got the rest of the week to go still. But it's Wednesday. This would be a higher high, higher low structure. But much like what I talked about in gold, which is, performing all right. But it starts to get trapped in a range between the larger swing and kind of an inside bar to this weekly swing with the high at 119.50 to the low here at $76.73. But you can see that maintaining closes above the upper first standard deviation right around a daily area of interest at 98. I'll talk about the daily in just a second. The upper second becomes the area of interest overhead from a Bollinger Band perspective on the weekly. And of course, this is inside of the 115 to 130 area overhead. So if we compress this chart a little bit, you can see that the upper second standard deviation just above 115, sitting around 116.30. If we continue to see this candle push through, especially during the course of the week, we'll likely see this head up towards right around the 117.5 or above, towards the 119.50, 120 area. And of course, that's going to bring back into play the 115 to 130 area of interest. Now, when looking at this from a daily perspective, though, we do need to be aware that we've hit some of the primary range targets, right? We saw a beautiful move in lower term timeframes. And in fact, I believe on the 4 hour, 4 hour shows the compression holding 98 after rejecting off of it a few times, getting up here, holding the zone between 90 and 95. Showing strength out of this support zone and testing the 98 and then into the 102.5 region. You can see that above there, right up to 105 to 107, swing above, close below, and then move back above and then come back into the area of interest between 105 and 107. Now, I've mentioned above here, especially on closes, if we haven't already seen it, 110 to 112 is the play in lower term timeframes. From the daily perspective, I believe that's going to remain true. Yeah, it's actually a little bit higher now as the range kind of expands with the volatility. And in this case, we are seeing that, realistically, anywhere above the upper first and this zone between 105 and 107, this high is back in play and this high is back in play. So I would be looking for 110 to 112, anywhere above 112. You can start entertaining right up to that 115 and then the highs, 117 to essentially 120. Any kind of closes in there opens up the entire range up here on expansion, because that would put price action on a close above the upper second standard deviation, thus roping in as high as 130 for the range and even swings outside of it over top of it. And then any continued expansion above there would be on closes above 130 would start to target the 140 to 147 or 140 to 150 range, just to kind of be general there for WTI. And if we continue to see strength, and I mentioned this, if we get a close over 102.5, we're probably going to see traditional markets take a little bit of a step back. They, still in and around the highs, but starting to put in those highs. And for NASDAQ and SPY, putting in that first structural new all-time high or second structural daily new all-time high. And when looking at UK oil, and I mentioned this, this is Brent. This is CFDs. This is the chart for CFDs on Brent. You can use futures and all that good stuff if you want. But in this case, holding on the daily, the close open right around the 92.32, like directly on it, closing directly on it, gapping up, coming back down, and then forming uptrending structure now on the daily after getting a trend break, really is targeting around that 115, 116 area, especially on any closures above yesterday's high, which was 113.81. I would start to entertain moves to the overhead resistance directly around the highs also. So anywhere between 116, 119, and potentially up to 119.50, 120. Any kind of closes above there would initiate expansion. I would take it, a couple bucks at a time, into the 125 to 130 region, then eventually up to 140, 150 if we did see that. And again, that's all. The condition is that it continues to close, in this case for trend above 97.50 and then maintaining closes above around that 90, around 92 to 96, 92 to 95 for Brent. And it still has the potential to keep pushing to the upside. And this is, going to have an effect on Dixie. It might not be a one-to-one effect in terms of the strength of the move that we saw in WTI, but we do now have a higher low close. Next area of interest is going to be the upper first standard deviation, right around 99.30. to 99.35. Anywhere above there, we're right back into the overhead resistance here that was swung twice and closed above twice, but not quite breaking through with any kind of gusto to actually go up and test 101 to 102, which is the range overhead. But I would start looking right back to 99.60. This is set up for a bit of a rejection, actually, as it stands right now. So you'd want to see it consolidate. Now, we used Dixie as kind of a metric to give us some caution on oil on the last big run up, because Dixie was on the daily run up when it was looking like it could get really powerful to the upside. We had already put in lower high, lower low structure. So we were already kind of trading back down, even though WTI and Brent were holding structure. Dixie started to break some important levels, and it already put in a trend reversal setup to a trend break. So I would watch this on the way up, even if it does test higher. This current setup, I think, would need some time unless it absolutely rocketed past the upper second standard deviation and started to close above that 140 cent region. So I would exercise caution around the overhead resistance if we continue to see oil push towards its macro overhead resistances. For WTI, that'd be around that 115 to 130 area. Keep a close eye on Dixie, because if it's telling you something different, we could see that trade start to turn into a move back down instead of a continuation up. But if we see Dixie follow suit and start to really break through the overhead resistance between 99.60 and 140 cents, then I would be looking for that to get continuation and for much larger corrections in traditional markets. Let's go ahead and focus on SPY for a moment here. I know post-market it traded back to like the upper first standard deviation, not shown on the chart here, but realistically it's, pulled back from the highs. Is this it? Does this mean that it's going to absolutely start falling apart from here? Well, we just have to wait and see. I would like to actually get some short fills higher, to be quite honest myself, because I am looking for a wider pullback sooner rather than later, and I'm positioning for that. Been long off the lows. It pays to hedge when I'm starting to see signs that, in terms of time frame, we could potentially see higher prices, but maybe even significantly higher prices, but I would like the chance to build out the other side of the trade. And I've got a little bit of that here, but I want to see what happens in oil, Dixie, the bond market, and many other things to really solidify my positioning. And I would actually like to see this come higher. But that doesn't mean I'm going to get what I want. And I'll just plan for, if I don't get that, I will have implemented a different strategy. And I'm going to be watching very closely tomorrow. And even the futures session that is showing back towards the upper first. So I'm going to be watching this throughout the evening. If we do get continuation past the highs, 715, I'd be looking 720, 725, and all the way up to the upper second around 730, and potentially even further to 733, where the upper second is, to 735. Fair game. It's blue skies, so it is fair game up there. Could it push even further? Yeah, sure, especially if oil starts to fall apart in terms of its upside move currently. And I would be looking for, if this was the high at 715, I'd be looking for initial moves back down to 690. If we did get a move back to 700 to 702, anywhere below there is where I'd be looking 690 to 695 by the basis. If that starts to break down, then I'd be looking 680 to 685, and then potentially right down to 671. That's the low rate here. I'd be looking for a gap fill. If we get anywhere under 680 on closes, especially, I'd be looking for a gap or at least a test at the top side. Maybe not even a gap fill initially, but at least a 670 with the bottom side of the range in and around that 675 region being a key area down to that lower first standard deviation. Anywhere below there, it's gap fill. 660s fair game. potentially even down to 650. Shout out to Ryan Ladd with the 650 call there, because I also happen on my chart just happens to be in bands. And that realistically, that could be in play, right? And I believe that he had mentioned it'd be somewhere around a 10% correction from the high. And that's, I think we need one. That's where it would put it. But it doesn't, it's not something I'm looking at as being viable right this very moment until I see and track along the way. But that would be an area if this was the high right here, right now, kind of at that 715. But if it goes higher, then obviously we can rope in some of the current structural supports that I'd be eyeing from the highs here to see if it can flip those from prior resistance and short-term low time frame support into daily supports upon retests between 695, 690, 685, 680. Now for Nasdaq, honestly, risk still being preferred right now, and I explained on Monday why. Essentially, this is lifting the offer, which in many cases can be your own offer, depending on where you're positioned, to kind of push things forward. But realistically, there is capital moving into the United States because of all of the things that I explained on Monday. When you have demand destruction in energy markets, it's a drag on the economy, which becomes obviously a drag on GDP. And Europe and Asia are facing this head on much more so than the United States, even though we are seeing rising costs at the pump and that becomes pretty clear when you look at the fracturing in the oil markets for pricing and the premium that Brent is carrying, and some of the actions that are being taken by different nations around the world. Maybe I'll give my thoughts on UAE and kind of describe that on Friday. But in this case, if we did get continuation past the 27.3 area, 27.5 to potentially 28, even low 28s to 22 are in the cards, right? Still blue sky move. Have to respect it. If we do see yesterday's low dropped, that being at 26,877, then I would look right back to somewhere around 26.5, 26.4 into the actual support high side of 25, around 25.8 to 26.2, where the basis band is. If that starts to fall apart, we start looking to, between 25.4, 25.5 as being an area of interest. There is a little bit of an opportunity for a gap fill there, and then it's right back down to the lower first, upper 24s to 24.5 and potentially even 24, kind of giving up a lot for a gap fill. Maybe bounces around there, but then we have to really start eyeing that lower low. It'd be very rare to see it, to see the market whipsaw from. It's rare, but it's not unheard of to see a market whipsaw from lower low to higher high, new all-time high, back to lower low, especially considering the economic climate and the energy crunch. But wouldn't be my first take. If anything, I'd be looking for a shallower correction, and then we gauge lower highs from there. Doesn't mean that it can't get there over time. I wouldn't be looking for it just like a straight shot down, although we have seen that happen. Dow getting the pullback towards the basis band. 48.4 is kind of the area of interest to pay attention to. If we do see that start to fall apart, I'd be looking, 47.8 to 48 down here, and anywhere below there, lower first standard deviation around the 47 to 47.5 being the first big area before potentially going for a gap fill back to the 46.5, 46, 7 to 8 area down here. So what am I going to be really watching? I'll be watching oil and Dixie. Now, for those that watch quite often, I don't really talk about bonds too much, but we did see that bit of a risk off move in the lower term timeframes. We had the Fed meeting today. Obviously, I mentioned I wasn't expecting a cut. I don't think very many were. Saw some lower term time frame volatility heading into the actual decision, and then of course during the speech, and it's looking more and more like Warsh is going to be. I think he's already through committee. He's going to be going to a vote on the floor, and it sounds as though he's going to be quickly approved. So what does that really mean? We have to watch. We have to watch carefully, kind of like how he does things and how he talks about doing things, right? Because he has there's some things that he's talked about that are purely at odds with each other, right? You want to cut 100 basis points, okay, but you also want to draw down the balance sheet. How are you going to manage that? I get that, the AI argument and deflationary pressures from AI. I get the argument from like an intellectual point of view. I don't see that as a reality though. In how companies are actually using it. And it's incredibly expensive and will likely maintain that amount of expense, if not more, over time, because they need to make money too, and fairly quickly for some of them. So, I'm not totally sold on how he plans to implement that. And I'm not really sure what his ideas are behind how he's going to roll that out or balance it, because it's going to be very, you got to really walk a tightrope if that's what you're going to try to do with two things that are purely at odds with each other. And then we have potential inflationary pressures from rising energy costs. So, and I'm going to come over to the Forex chart here. So the screen's going to move from dark to pure white background. So just a warning. Here we go. So one of the things I mentioned, keep an eye on crude oil inventories. And I have that actually pulled up here, reading through the report. Obviously, there's the production metrics, and then, how much is actually, being drawn down, right? And in terms of where we are week to week in terms of oil inventories, because we have a lot of ships coming into the United States to pick up oil. Obviously, oil inventories are going to be down week to week. And that's going to be important to watch as time goes on and as more ships come over. The other thing to watch is, and it's going to be less important because of the time of year, because we're on the other side of winter, but I would watch natural gas. And tomorrow we will get those metrics, I believe, on Thursday, right? So yeah, natural gas storage down here. So that's going to be Thursday for me at 9:30 a.m. So just keep an eye on those two things, really. The other thing is tomorrow we've got advanced GDP. We've got core PCE. Now, understanding that the Fed uses core PCE to cut out the noise of volatile markets and potential short-term volatility in markets, with the rising costs in oil in the energy sector, because oil is higher, we will start to see that creep into PCE. So it's not directly going to be in the PCE numbers, but it will start to creep in. So it's going to be interesting to see how he handles this particular situation. And honestly, we are ramping up production in the United States. So it's not like it's slowing down. It's ramping up, and it's been ramping up, and it's going to continue to ramp up. But then there's still supply and demand, right? supply and demand domestically, and then for those coming into the United States to buy United States oil. So it's going to be a situation to watch and keep an eye on. Markets are in a good position, to be honest with you, when it comes to, NASDAQ and SPY in terms of structural price positioning. But now it's going to be really about looking at the economy itself, keeping track of what's going on with oil, and as it relates to, all relating back to risk rotation, risk on versus risk off. And if you're looking at Bitcoin and you're in crypto, you really have to understand that the wider market views all of crypto, Bitcoin included. Well, Bitcoin's not crypto. Okay. But as a market segment, it is seen as risk on. So understand that if we get a risk off move, not great for prices with Bitcoin. And therefore, wherever Bitcoin's going, in general, the rest of the market will go. I say in general, there will be outliers like your hyperliquids and other things. We've seen outliers before for a long time. Link was an outlier. So, but the market comes for all eventually. All right. So I'm going to leave you with that. I'll be back here on Friday. And actually, I do want to educate some people about my perspective on what's happening with the UAE exiting OPEC and kind of what that means. I also want to show you a visual and how this is actually a really prudent move on their part, and a shrewd move, good business move, because of where their deep water port is and where their pipelines are, and how in some ways it's actually they have. They're even a little bit more protected because you don't have to go through and buy Yemen and some of the proxies of Iran that are in Yemen coming out of the Red Sea on the other side for Saudi Arabia. So really interesting stuff, I think, and something to keep track of. And I'll explain that on Friday. But for now, I want to wish you all a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always and above all, stay safe so that you can trade some more, make some money. And please like and share this out there as you typically do. I do appreciate it, each and every one of you. Big shout out to all the different crews. Obviously to David. Enjoyed talking to him today for the 700th episode of The Breakdown. Had a chance to jump on with Cade and the Wolf Bitcoin crew and the Trader crew over there. It's always great to listen to them. And big shout out to ATC. Dave Cool and Nat putting that show on every day and every afternoon and evening on the East Coast. So I'll see you there. I'll see you there on tomorrow, Thursday. And then I'll be back here to talk to you again for the Friday wrap up. Take care. Landy out.